Hello traders, in this module we're going to be focusing on understanding and mastering breakouts and the three things that markets do. Within these three things that markets do, looking and hunting for the Thursday ACB trading setup. I just want traders to be patient during this module because I'm going to take you through some different scenarios. And the point of that is to demonstrate how sometimes the ACB template is not going to set up, but it will set up for session trades for people, and how those trades can play out in your session, Asia, London, or we can get variations of the ACB template on a Thursday that aren't going to be textbook perfect, but they can still offer traders an opportunity. Now, the simple model, go back and watch yesterday's video on the basic simple model to reinforce what I am teaching my sons, is the close and breakout on Wednesday, either at the high of the week, low of the week, high of the month, low of the month level, the coil sideways into the New York session, an entry, a stop, and a walk away. Now today in this video, this first part of this video, I'm going to show different variations. Do not get confused. Please listen to that again. Do not get confused. I am just demonstrating different variations because traders are going to say, well, it didn't play out, or it was this, or it was that. Stick to the basic model, but learn from the other opportunities that can show up, and there are different sessions that will benefit from acknowledging when they get the same close in breakout, but it may just set up for a session trade. Okay, now let's continue. Now, mastering this understanding of the daily time frame and the monthly cycles and looking for the Thursday trade setup will allow traders to identify other high probability opportunities as a result of these templates unfolding when markets break out. Markets only do three things. They break out, they pull back, and they continue to trend. Some breakouts will succeed, but within that succession of breakout, we can also see opportunities again for the Thursday reversal, and in some cases a Thursday continuation trend trade. Simplifying everything, that when a market closes in breakout and we come to Thursday, as I have mentioned, is the high probability day for an explosive reversal and in some cases a continuation trade, as we went through in the last video. But throughout this market breaking out and succeeding, we can also have markets that will break out and fail, and we can start a new cycle, whether it's on a one-day trade setup or for a month that will continue to break down and reverse the other way. So we have a market, looking at different examples, we have a market that breaks out at a new month, a new timing cycle. Week 1, non-farm payrolls week, we have a market that breaks a previous monthly boundary. And now, some traders have asked questions about certain days, how you mark a level, and the simple understanding is just that when a market starts to break out, and knowing we're in a non-farm payrolls week, we may get a new month setup as we saw false break reversals, and that comes back to what day of the week are we, and I'm looking for the Thursday collapse on a 1, 2, 3 high close of the week or low close of the week or month for the coil sideways and the collapse in the New York session. Now, some traders are going to have this opportunity in Asia for a session trade, or in London for a session trade, because certain instruments may set up for an opportunity in their session, and it may just be for a session trade, but a parabolic explosive move. Now, the Thursday ACB template is ideally 3 higher closes, close and breakout, and 3 higher closes, or 3 lower closes, or a market closing in breakout at the high or low close of a week or month heading into Thursday. And we'll look at some different examples, but the most important part to understand is what happens when a market breaks out, and does it set up into that Monday, Tuesday, Wednesday template. We can see a market that's broken a new boundary on a new month. Monday, Tuesday, Wednesday, we start a new cycle to the high close of the month in breakout, and that sets up a reversal, a large one-day reversal. Now, there are going to be instances where major red news may be a catalyst or prevent us from being in that opportunity, an explosive move that takes off without us. But for traders, again, who are tracking the market once it breaks out can now follow that and identify other session opportunities. Or as a market breaks down, we can have a Monday, Tuesday, Wednesday, 3 higher closes, continuation collapse, ACB, in line with that original collapse from the high of the month level as it resumes its way back towards the other side of a month. We break out again, consolidate, so markets can break out and go into a trading range. A trading range. Now, again, identifying no setup. No setup. It continues to break out. So for traders who are looking to counter trend or catch moves or catch the low, it blows through that low of month level. We start a new month and the market goes into 1, 2, 3 lower closes. Now, for the purposes of just this right now, I'm just walking through, and I encourage you again, each video I talk about walking through the daily time frame and talking to yourself and saying week 1, week 2, week 3, week 4, non-farm payrolls, CPI, FOMC, and then going through your Monday, Tuesday, Wednesday. We have a market now closing back outside of a previous high of day level. So we have a market that's been breaking down. Traders will look for the first green day. Now, I don't know if this is a trade opportunity or not, but just right now walking through in a market that closes in breakout above a previous high of day level, and it goes sideways into a trading range before breaking out again. Now, this is where traders are looking all the time to catch the low and catch the high when the underlying higher time frame trend may still be down. And this is where we can have our Monday, Tuesday, Wednesday, Thursday monkey hammer collapse back in line with that original downward driving move. Week 1, week 2, week 3 breaking back down, working our way and potentially establishing now a low close of the month as we head into the end of the month, week 4. And then we get our 1, 2, 3 higher closes, a market closing in breakout, and again one more day for a potential continuation. Now, I don't know what days of the week this is. It's more the focus right now is understanding when markets are in breakout, when they're pulling back and breaking out again from previous daily levels into a new week, and does that set up into a Monday, Tuesday, Wednesday template. Now, as your skill set grows, you are going to identify other opportunities on other days in different sessions based on understanding when markets close in breakout, and then understanding when they break a monthly level, week 1, week 2, week 3, whatever that may be. We're going to walk through some different examples. And if a market is trending, we can have counter trend higher closes or lower closes that close in breakout that offer us the Monday, Tuesday, Wednesday template. Now, when we start a new month, a new timing cycle on any instrument, again, walk yourself through daily charts looking for markets, how they behave. Any instrument doesn't matter. But once they break a new level, they're either on a new month breaking out to establish a new boundary and continue to break out and trend, or that market at some point may offer a reversal opportunity, whether it's just back into the breakout or for a reversal to the other side of the trading range where that month initially broke out from. So we have our pump and dump thesis over a larger time frame, and within that looking for the Monday, Tuesday, Wednesday reversal opportunity. And at some point we may have that present. Now, again, an example of where the Japanese yen may offer that to traders in the Asian session or London window when they have a market closing in breakout in that Monday, Tuesday, Wednesday cycle. Week 1, week 2, week 3, and we have a market that has closed the week on the Thursday heading back into the new week in breakout, but we get our Monday, Tuesday, Wednesday high close of the week into the high of the month potential setup. Now, I'm just demonstrating this for following a market. This market is already in breakout. We've broken out of the previous high of month level and continued to breakout again. So while we're up high here, we're already in breakout. Week 1, week 2, week 3. But most importantly, what only matters is, does the market set up when we have that opportunity present? We can have all kinds of ideas about what markets are doing, but the most important part on the day in the session that you're trading is, do we get a coil opportunity for a parabolic explosive move? Week 1, week 2, week 3, Monday, Tuesday, lower lows. Week 3, high close of the week on Wednesday into after breaking the high of week level on Monday for a potential setup. We have the high close of the week in place heading into our Asian session. We're on the last trading day of the month for February. We've already broken the previous week's boundary. We're only 10 pips away from the highest close of the month on the last trading day of the month. And the point of me demonstrating this again, we just come back to our process. If you're trading the Asian session, the Japanese yen may offer you this parabolic opportunity in the Asian window. We have a Monday, Tuesday, Wednesday, high close of the week and technically the month. We're only 10 pips away on the last trading day from the high of the month level for an ACB all-in collapse for a session opportunity. Now, the reason I mention this is that when we get moves in Asia or London, and I've talked about this previously, is that that's different than having a New York session all-in collapse that can reverse all 3 sessions and the entire day and potentially a week. But this is an example of a high close of the week coiled into a session opportunity for currency pair. The coil, high close of the week and month, coiling into our session open, scalable and repeatable. This opportunity will show up on Asian cross pairs in the Asian window. Again, the same process. Monday, Tuesday, Wednesday, high close of the week, low close of the week. We're at the highest closing price, coiled into our market, and just keeping things as simple as possible. Taking a position, placing our stop at the extreme, putting a target in place, and in this particular case, we can use a range expansion target of the high-low of the previous day's level as a potential 100% expansion of the range. Now, as I've told you, my sons are trading the New York session, but I know there are several traders who are trading Asia. They can't trade the New York session because they're in the southern hemisphere. The New York session may be too late. But the same process applies. Markets that break out are either going to continue to stay in breakout, but they can still offer us the Monday, Tuesday, Wednesday setup. That's what the same process applies, repeating the same process. Monday, Tuesday, Wednesday, a market in breakout at the high of the month, high of the week, coiling into the session, entry, stop loss, take profit, target. Repeating now, we had a market that broke out from the previous monthly range, continued to trade higher, putting in a high close of the month. That market then continued week 3, trading back up into the high close of the month level. And on our last trading week of the month, 1, 2, 3 into the high close, high of month level. 1, 2, 3 on week 3, giving us the Thursday coil in the Asian session. Remembering we're already in breakout, we broke out again at the end of the week 3 into the last week of the month and went 1, 2, 3 higher closes above the breakout level for a Thursday coiled market in the Asian session. Again, just a variation of a 1, 2, 3 at the high of the month. And of course, we can see the new month heading into March, non-farm payrolls week, pushing up into that high close of the month level and breaking down on the backside Monday, Tuesday, Wednesday, Thursday, Friday into the low of month collapse. So a market that broke out, stayed in breakout, and eventually the breakout failed. And understanding we have a month and heading into our new monthly cycle, the same process starts again. And this is the first trading day of March heading into the new monthly cycle. So different instruments may show an opportunity week 1. Different instruments may show an opportunity week 2. and again, week 3 or week 4. So having a basket of a few currencies, a couple of indexes, we're looking for high close of week, low close of week, closes in breakout. And in some instances, if a market is trending or breaking down, we can have the same opportunity back in line with the trend. Now we're looking at gold, and just an example again of where a market breaks out of a low of month level on a Monday, Tuesday, Wednesday, closing as 3 lower closes in breakout heading into our Thursday trading day. And I'm just showing some different variations of setups that can present after a signal, but more importantly, walking yourself through just when a market breaks a monthly level and when a new month starts. That is the most important thing to do, because as the month trades, once a level's either been broken or traded into, we looked at an example on gold previously, just to our left of the screen on the first trading day of a new month, of a market that closed in breakout and gave traders an exceptional coil on a Monday, which we'll look at again in one moment. But for the purposes of this, just understanding when markets break out, what can happen and how does it set up the following day on the Monday, Tuesday, Wednesday template. Remembering that once a market breaks out, the breakout may succeed or it may fail. And if it fails, does that offer traders an opportunity? Now, major red news again can be a factor, but for just simplicity, walking through and looking at different presentations of what happened when markets break out. One of the reasons I look at, we'll go month to month, but just backing this up, you can see the large move that came out of this low of month reversal. First green day, and we'll walk through some of these. But so for traders, if you're looking at different extremes, once a market breaks out, think in terms of daily time frame traders or longer time frame traders, using these extremes as their maximum risk for trade setup opportunities. A pin hammer at the low of the month level, week 2. Week 2 breaks out. We have a first green day the following day. But how does that set up on the day for traders on the Thursday in the sessions that they're trading? Now, on this particular day, we had major red news at 8:30 in the U.S. window. Not necessarily high impact, but with metals in particular, we can see gold and silver be quite reactive around major red news in the U.S. window. Now, again, my sons are not going to be trading if there is high impact major red news on the calendar on the Thursday, unless that market trades and presents in that template without any volatility. We went through an example of that with CPI the other day, which is a no-go zone. So if that's on the calendar, then there's no trade that week on that Thursday. If there is major red news that's necessarily less high impact, if the coil presents without any volatility, again, the same process applies after the news, taking a position, putting a stop in place and walking away. But if it's CPI, FOMC, non-farm payrolls, it's definitely a no-go zone. So when we come into our session the following day, we have a market that's closed in breakout on a Wednesday at the lowest closing price of the month, 3 lower closes and closing in breakout. We arguably have a first green day signal on the Wednesday. Do we get our coil on the Thursday in any of the sessions? I'm just walking through the same process because this opportunity presented for traders in the Europe window, and simply, again, taking a position, putting a stop in place, walking away. Now, we had major red news at 8:30, and in this particular case, as you can see, there is volatility. If traders were in this, they're either at break even with profits or getting out because this market, obviously any volatility. But this is not the ACB template. So that's one of the main things I want to make clear, is that we did not get the ACB template on either the Japanese yen into New York or on gold. In Europe, their market has coiled and started to break out. This is not an ACB trade. So if the market moves in an earlier session, after a close and breakout, or at the extreme high close of the month, low close of the month, and that coil presents in a session, it's a session trade. It is not an ACB. Then this market went to the close, as did the Japanese yen. But again, the point of the ACB template is to be able to put size into a market as it's about to go parabolic and collapse. Now, the Japanese yen did that but there was volatility throughout the rest of the day, differentiating a New York session trade that closes out the day. Asia still has London and New York to trade. London still has New York to trade. There's major red news on the calendar. The ACB template is about positioning yourself, and if there is any major red news, it has to be after all that news is digested. I cannot put any size or tell my sons to put any positions of size into a market where there is high impact or potentially high impact volatility. That is the whole point, which is what we're going to look at next, the ACBs that do present where there is no volatility and the market trades till close. Most importantly, though, what I'm emphasizing here is to master the understanding of when a market breaks a monthly level and what happens once it closes in breakouts, if it breaks out of a month or if it sets up for a reversal of a failed breakout of a monthly level. Looking at gold, we had an explosive breakout on the first trading day of a new month, and this is a classic example of where traders may be trying to catch the high or counter trending this, and we have a market that week one explodes and continues to close in breakout. Week two pulling back and coiling sideways into that week one breakout. So if we just project our high of week level across, and then we have week three, Monday, Tuesday, Wednesday, high close of the month, closing in breakout. How does price set up when we come to our screen on the Thursday? Now, I want to just, again, keep repeating some simple things to plant the seeds in traders' heads about hunting out setups that are going to coil and go to the close. Now, simplicity, rinse and repeat, means looking for these on a Wednesday for a Thursday trade setup. So we're going to have different variations. Sometimes they're not going to present into the New York window. So it's a no-go for my sons. Don't touch the instrument. It's already moved away and given a session trade. That's the scenario I'm trying to paint out for people. But we have new timing, new monthly cycle. We have markets in breakouts and breakouts that can continue week one, week two, week three, and not trying to just catch moves against markets that are either consolidating or in breakout and haven't given us a sign of either reversing or changing the underlying higher time frame trend. So we have a market that's closed in breakout on week three at the high close of the month, but it explodes the next day, and that's not a sideways market. We've broken out again, but this is where we have a different type of template and a rolling over of our longer, higher time frame. We talked about this with the 4 hours. So a market that breaks out and consolidates up high, we still have a consolidation now happening. Does this give us a coil into our New York window? Now, I want to also just paint out the scenario. The same type of understanding applies on a daily time frame when markets start to trap volume up high. We can draw levels across on daily charts of higher closes heading into extremes, because this becomes a neckline where volume can be trapped up top, and also a reference area if we do have our coil of where a position can be taken to break even at. So how does price set up into our US window? Now, on this particular day, the market had major red news at 8:30 and 9:45. Now, this is a scenario where, as I mentioned, if the market gives us a textbook perfect coil and we're heading into a news potential catalyst event now, not a volatile event, as we saw the Europe window had already moved, but we're heading into a US window up high and we have a coil, this is an example of where the market can already start to collapse and the news will act as a catalyst to complete a move. Now, in my son's cases, with this scenario, I will tell them to not trade on the day where there's major red news if it's after a coiled market. Now, this is just where I'm trying to prevent them from trading on any days where there's major red news that could potentially be high impact. If the coil comes after the news is released and there's no volatility, no problem. Position, stop loss, hold till close. But I'm demonstrating how news, because traders are going to walk away, they're going to have the ACB template, and they're going to say, yeah, but there was news. Now, there are going to be instances where I would put a position in the market, put a stop in place when we have a coil up high at the highest close of the month in a perfectly engineered coil, and moving that position to break even if the news acts as a catalyst. Now we're up high. We've already exploded outside of the range. We have our entry, our pump into our coil right at the 8 a.m. Taking a position. Again, I'm not worried about pushes, gaps, or anything else. Once this market breaks down from our pump into our coil, taking a position, putting a stop in place. When it breaks this low of session level from the previous session that we marked off on the other chart up top here, we'll just show this again. We'll blow this up. The neckline area, when it breaks that level, moving to break even and walking away. Once this market starts to break down, in this particular case, obviously a better fill could have been taken down low, but in the simplicity of the method, either taking profits or holding that position till close. Now, this is a rare type of template, but I'm just showing this to traders because you are going to see variations, especially on the metals, where we can have this blow off in the Asian window and the consolidation up high. We still had our criteria met. We can manage our risk. The market was collapsing into the news, which acted as a catalyst to complete that move. Now, as I mentioned to you, my sons will not be trading this unless it's a perfectly well-engineered coil with no volatility. We saw volatility on the Europe session move from the previous month in February. No-go zone. No-go zone. It needs to be sideways in that market, up high for a reversal. And demonstrating to you also, we have space, a lot of space for this to free fall back into the breakout level, and that market continued to go into longs from the FOMC Wednesday. An example of where they use the news to explode higher and have volume carried up high, trapping volume up high for a reversal after a high impact news event. Week 1, week 2, week 3, FOMC blowing off to the high of month level. We're at the thesis being, again, potentially putting the high close of the month in place, using our 5-minute coil to position ourselves, put a stop in place, and then walking away. Now, in this particular case, the market pulled back. We can see that it continued to drop into the close of the week. And an example of when we have an extreme blow off like this, if traders are locking in profits, and on the longer time frame, you can see 1 hour, 2 hour, 3 hours into a 3 lower closes to potentially lock in their profits. 1, 2, 3 down, 3 lower closes. And then if they're confident that this could be the high of the month or at least the high of the week, leaving a trailer in place either above an extreme with a trailing locking in profit level and allowing that market to trade into the close of the week, depending on if there's any major high impact news. But demonstrating over the higher time frame how we had our Monday, Tuesday, Wednesday FOMC acting as a catalyst to take traders up high, trapping volume up high, giving us our 5-minute coil into the US window, our pump and dump on the smaller time frame into our coil. Now we're above the 200. Okay, but understand the market was taken up into an extreme. But we have our other time frames all rolling over now, and we'll look at the 4-hour chart to show where we may have already had that 4-hour high in place. We have a large pin from our Asian window and 3 higher closes heading into our new 4-hour 6 a.m. candle before the reversal back down into the close of the week. So looking left, we see that a previous high of week level was taken out. 3 higher closes, the beginning of our new 4-hour rotation at 6 a.m., which allowed us to position ourselves in that 8 a.m. coil into the collapse back into the FOMC breakout. Most importantly though, Monday, Tuesday, Wednesday, high close of the month or week. How does price set up on the following day? We saw an example of an Asian session coil, a London session coil, and a US session coil at the high price of the month. And in this particular case, I believe at the time, the high price of the year. So walking through the daily chart on any instrument, if you have Japanese yen, the pound, a couple of yen cross pairs, or any major pair that you can identify breaks a level, and then how does price behave? Does that breakout succeed? Is there a market trading in a trading range? Inside of previous monthly high levels that closes in breakout. How does that set up on the day? Now, again, I'll repeat with my sons. They are only looking for markets that close in breakout as the highest or lowest closing price of the week or month on a Wednesday for a Thursday ACB trade setup. Now, sometimes we're going to see that not set up on a Thursday, and we're going to see huge moves occur on a Friday. Again, this is an example on gold where we see a market high close of the week on Wednesday continuing to trade higher, and high close of the month and the week on a Friday for a London session monkey hammer all in collapse right at the London Open. Now, backing this up, we can see that the market went down on Monday and made a lower low and pumped back up into a market that had been breaking down. Now, this to me is the ideal setup. If my sons can find a Monday, Tuesday, Wednesday template that is pumping back up into a market that has broken down, that's easy money. In this particular case, the trade played out early for London for an all-in collapse to the low of month level. Now, for traders in the US window, they're forced to trade the low-hanging fruit. And, the purposes of this video is I don't want to, we're not going to get too off track. I want to repeat simple Monday, Tuesday, Wednesday, high close of the month or week, or low close of the month or week. And this is an example of where the market closed in breakout. It came up on our watch list because it closed in breakout in a market that was already breaking down. We're starting a new month. First trading day of the month on the Monday. Repeating some simple things, timings. New month, we get our Monday, Tuesday, Wednesday, high close of the new month, end of the week, but the market doesn't set up. Now, we just looked at an example of where the market traded higher and went into consolidation up high. We didn't get that. The market continued to break higher, pulled back, and closed higher in breakout again at the high close of the week and the month heading into Friday. New month, new timing cycle. We're heading into Friday. How does price behave on the Friday? Now, interestingly enough, this is a non-farm payrolls Friday and week one in a new month, but we have our monkey hammer template. How does it set up in the session on the day? The thing I want to keep repeating is high close of the month, low close of the month, and the coil. We have a close and breakout. We have a market that has now traded sideways inside of a high-low range into our session in the London window. So previous, we saw a London coil that was heading to major red news that got volatility. We have a situation here where market coils into our London session for an opportunity to keep it simple, taking a position in our coil, in our session window, putting a stop in place either above the peak formation or at the extreme, and either walking away with a hold till close or getting out before non-farm payrolls. And in my experience, either locking in the majority of the profits and leaving a small position in place as a runner prior to payrolls, or completely exiting the market altogether. And we look at our daily chart, we can see, again, clearing out previous weekly highs, closing in breakout. So we have the Thursday closing at the extreme, whereas on the Wednesday we were still inside of a range, even though it was the high close of the month and the week, the new month. I want to just show traders stepping back and looking where the larger breakout can occur, and we are heading into a non-farm payrolls Friday. So an example of even when a non-farm payrolls week 1 in a new month, we can still have a potential template set up for an ACB trade opportunity. So we can see sometimes on the metals, we're going to see different variations of how things can play out differently, how major red news can affect that and still complete the pattern at the extreme in breakout, and how that sets up in relation to the rest of a monthly template. We'll see you in the next video.